Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Brian Stutland, Chief Investment Officer at Equity Armor Investments, for an update on Q2 earnings season. And Brian, it really has, I mean, we're in the thick of it, the busiest earnings week of the season.
We certainly are. You know, we have obviously Google, Microsoft came out, Meta yesterday. The stock's doing very well today. And then, of course, next week is Apple. So a lot on tap, especially for Nasdaq-100 stocks, at least the top portion of the weightings of that index. That comprises what, about 20% of holdings, those few names. So certainly that's going to have a big impact on the index itself.
How's the index trading overall? You said you noticed a reversal in the overnight trade.
Yeah, I mean, certainly after the Fed meeting, they sort of painted a dovish picture that we're getting closer to the end of where they need to be raising rates, basically saying, yes, we want to target that 2% inflation rate, but we are getting there. And that further rate hikes, yes, that maybe they come, maybe one more, but it kind of, to me, felt like Powell was indicating that we're getting near the end of any sort of rate hike cycle. And obviously the markets were up then into the overnight trade. And then all of a sudden we saw this big reversal off the open today, and selling continues even over the last hour or so. Pretty heavy, aggressive selling relative to what the markets were doing earlier in the day. And so it's an interesting sort of reversal that we're seeing, maybe some profit taking.
Do you think it has anything to do with the ECB raising rates? Because it sounded as if, their Fed head, it kind of mimicked a little bit what Powell said. And it didn't sound like his strategy was reversing course anytime soon. I took it as maybe a pause, but rate hikes are still in the future. I mean, nothing indicating cuts.
Well, I think that the fact that the ECB sounds like they're a little bit more hawkish, a little bit more aggressive, we're seeing that sort of weaken the U.S. dollar. So then what happens? People have to sell U.S. assets if they're going to move that into Europe. That might be selling the stock market. It might be selling our bonds. Either way, we're seeing both those things being sold today. And there might be this rotation out of the U.S. into other areas of the world, frankly.
Yeah, I mean, I believe the Dow, if it's up today, it'll be a record-breaking up 14 sessions in a row. I mean, granted, the Dow is a very different measure than the S&P 500 and the Nasdaq, of course, based on price, and the other indexes based on weighting. But it feels as if things are pretty frothy here.
Yeah, I mean, when you look at VolQ, let's say, for instance, or other volatility index, the complacency that's gone on with them being so suppressed, trading in the teens level here, that's basically under their average, historical averages, to me shows a little bit of complacency in the market. And so maybe just with this streak that we've seen in the Dow, and now we're seeing the 10-year rate tick back to 4% today, maybe this is giving people reason to just sort of sell and take some profit and maybe sit on the sideline, at least for, a few weeks here. We're getting into September in the fall. Once this earnings season passes, there's really nothing left until now October or the next Fed meeting that sort of is going to buoy this market.
Are you thinking about putting some protection on if you haven't already? I mean, with vol at these levels, it's cheap.
Well, I think there are some areas in the market to do that. I mean, we talked about Apple earnings next week, for example. Implied move on that earnings, according to the option prices, is only about a 3% move for Apple after earnings. That's actually relatively low. The stock historically moves about 4%. So I think in somewhere we're there, we own Apple because we have a NASDAQ portfolio. But other than that, we're not really overweight Apple in other areas. And that's a stock I might be looking to buy a put if I'm sort of overweight relative to the rest of the market. That's an area to sort of buy some protection. Other areas, like I said, volatility indices are relatively low. We're seeing it pop today. I don't know if you just jump in right away today, but certainly if we see sort of like the VIX or whatever get down into 13 handle area, that's probably an area where I want to buy some puts on the market, whether it's the NASDAQ index market or the S&P futures market.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.